We've been discussing the process for auditing the revenue and collection cycle. In the last video, we discussed the fourth step, evaluating the design of internal controls. The next step is to test the controls. After the auditor has learned how a company's internal controls are supposed to work, the auditor needs to test the operating effectiveness of those controls. Specifically, the auditor needs to determine whether each control is operating as designed and is being performed by an employee with both the ability and the authorization to perform the control. Now, there are several ways for auditors to do this. These include asking the client questions, watching the client actually perform the control, inspecting the client's documents for evidence that the control was performed, reperforming the control yourself, and conducting a walkthrough that includes a combination of these steps. If it turns out that an internal control is not operating effectively, the risk of material misstatement increases. This means the auditor will need to increase the amount of substantive procedures to keep audit risk at an acceptable level. Now, when the auditor is testing the controls, the auditor can sometimes perform dual direction tests, also known as dual purpose procedures. For example, to ensure the client is checking for a three-way match of the customer order, shipping document, and sales invoice, the auditor can both test the existence assertion by vouching a sample of sales invoices to the related shipping documents, and test the completeness assertion by tracing a sample of shipping documents to the sales invoices. Audit software can be very helpful when testing controls. In some cases, the auditor can examine the entire sales journal to see if there are any sales lacking a three-way match. The auditor can also use audit software to check the numerical sequence of documents for either missing numbers in the sequence or duplication of numbers in the sequence. The auditor should also observe the client's employees as they check for issues with the numerical sequence. Next, let's discuss how the auditor can test the controls related to each management assertion for revenue. Let's start with occurrence. To check that sales invoices are supported by customer orders and shipping documents, the auditor can vouch sales invoices back to the related orders and shipping documents. The auditor can also observe whether the client has instituted segregation of duties. When it comes to completeness, the auditor should make sure the client is checking the numerical sequence of documents to verify that nothing is missing, trace shipping documents to sales invoices to make sure the billing department is regularly receiving shipping information, and check the list of unfilled orders to see if any orders were shipped but not billed. For the authorization assertion, the auditor should check prices from invoices against the client's price list and verify that no customers exceeded their credit limit. To check the accuracy assertion, the auditor can check whether prices on invoices match prices from the price list and that the number of units shipped matches the quantity listed on the shipping documents. For the cutoff assertion, the auditor should check the clients are being billed within a short time of the goods being shipped and make sure that the client is comparing the dates on the sales invoices to the dates on the shipping documents. Finally, for the classification assertion, the auditor should check sales invoices to verify that the client is properly coding revenue items. Wow, that's a lot of information, but we still need to talk about testing the controls for receivables, so stay with me. Let's discuss how the auditor can test the controls for assertions about accounts receivable balances. For the existence assertion, the auditor can vouch accounts receivable back to the related invoices, shipping documents, and customer orders. With respect to rights and obligations, the auditor should check that the company has a process for verifying that its receivables haven't been sold. When it comes to completeness, the auditor should verify that the client is matching pre-numbered shipping documents to sales invoices in order to check for shipments that might not have been billed. For valuation, the auditor should verify that the company regularly updates its credit records and takes action on delinquent accounts. And finally, when it comes to classification, the auditor should check the chart of accounts to see whether the client is classifying its receivables correctly. After the tests of controls have been completed, the auditor should set the achieved level of control risk. If the achieved level of control risk is lower than the planned level of control risk, the amount of substantive procedures can be reduced. For example, accounts receivable confirmations can be sent prior to the fiscal year end, and the auditor can take a smaller sample size. If the achieved level of control risk is higher than the planned level of control risk, for example, if the auditor found that the client was billing customers when goods hadn't been shipped, or that the client wasn't observing the proper segregation of duties, then the amount of substantive procedures should be increased. For example, the auditor might need to choose a larger sample size when confirming accounts receivable. And that's how you test internal controls for the revenue and collection cycle. We'll discuss substantive procedures in the next video. See you soon!